Hi everyone, I'm Ken from Crypto Trading KS and the CTKS Method. Today we're going to look through the main news headlines from the Wall Street Journal, Reuters and Bloomberg. We're also going to dive into crypto news and see what's cooking. And there's a lot of things happening that you need to be aware of, especially with the upcoming Jackson Hole meeting where the Fed Chair Jerome Powell will speak. Let's run the numbers. Inside this video, the first thing we're going to do is to look at global news, then the market impacts, and then finally get the institutional pulse. In the institutional pulse section, we'll do a deep dive into liquidations. I think you'll find it incredibly useful. If you're new, a very warm welcome, and welcome back CTKS family. When looking at the news, it's important to realize and to understand that the news just reflects the current market sentiment. That is the way that the news works. One day it's going to be up, the next day it's going to be down. What we need to do is to find signal amongst all of that noise. This is usually in section 3 of our analysis, but I wanted to put this up. This is the target rate of the federal funds rate. Yesterday, a 50 basis point decrease in the federal funds rate was 23%. That was slightly down on the previous day of 25%. Now I want to show you right now. You can see it's increased really substantially to 32.5%. Now, what does this mean? It means basically the Fed has broken something inside the economic system. Now, what does that mean? That means we can expect turbulence and volatility ahead. At the next FOMC meeting, which is on the 18th of September, there's still a 67.5% probability of a 25 basis point easing. We've just come through a time of extreme volatility, and when we look at the S&P 500 50-day moving average spread, the entire S&P 500 was extremely oversold. Now it's moved back into overbought territory. Looking back, the past 12 months, when we get this kind of uptake, you can just see from oversold or extremely oversold into overbought. It tends to hover around the overbought area for quite some time. Please let me know in the comments, do you think this is going to be the case this time? We've seen incredible volatility, and when we look at the VIX one-day change from the previous close to the next day high, we had in August 2024 the largest spike on record. Now that's pretty cool stuff. We've come through the GFC and also COVID. We experienced something far greater than that. If you were cautious during this time, you understand that opportunities reset each and every day, and it's no big deal. It depends on the year, but when we get moves between overbought and oversold readings and vice versa, the markets on average tend to go positive 1 month later, 3 months later, 6 months later, and 1 year later. Just something to keep in mind. One thing that's been driving the VIX down really substantially is the decline in the DXY, or the US dollar currency index. It's now down so many sessions. And when looking at the Bloomberg dollar gauge, we can see that it's just retraced so many months down to the March lows. When economic data releases occur, they are frequently revised either upwards or downwards when more information comes out, and the Federal Reserve is confronting up to 1 million US jobs vanishing in the revision. This is all about payrolls growth, and it was at least 600,000 weaker than currently estimated, or about 50,000 per month. Any revision over 500,000 would be the largest revision in 15 years. This is why I showed you just at the start how the 50 basis point increase was actually gathering percentage probabilities because of the weakening labor market. The payroll revisions is due on Wednesday, and it's going to be something that could really move the market around, so please be aware of this. That means you just need to know your structure. And later on in the video, I'm going to show you some magic when it comes to liquidations. There's some key events for this week, so just bear in mind these could all move the markets around. Markets are largely volatile, and it's the volatility which makes us the return. So volatility isn't a problem. Being prepared is the problem. And when Fed Chair Jerome Powell speaks at Jackson Hole Symposium on Friday in Wyoming, we have to be aware that if a 50 basis point increase or decrease, is put on the table for the federal funds rate, the markets are just going to go haywire. Please be aware of this. This raises the question, after Jackson Hole, how has the stock market actually progressed? Except for 2022 and 2020, it's all progressed rather positively, so just bear this in mind. One thing to be aware of, when people earn their income, they have it reduced by taxation. And of course, what's left after that can be invested and also used for luxuries like paying mortgages and rent and food. One thing that when it comes to taxation, if you're earning this amount and the tax is this amount, you don't have much to live on, let alone invest or trade with. So therefore, increasing taxes is always a problem for the stock market. Increasing taxes will drive everything down. And this is something that could be impacting the markets at this current time. No matter what political side of the fence you belong to, taxation is a problem. Kamala Harris has endorsed Biden's 2025 capital gains tax proposal, which will take capital gains tax to 44.6%, the highest since 1922. This will absolutely crush the stock market. It's a big problem. There's also a 25% proposed tax on unrealized capital gains. And if Kamala is elected president, she will lovingly raise the corporate tax rate to 28% from 21%, the highest in 40 plus years. The governments have basically two economic principles that they adhere to: monetary policy, which is all about the federal funds rate, and fiscal policy, which is all about taxation. When fiscal policy is tightened, and that's what we're seeing with these proposals, if fiscal policy is tightened, it means that there will be less money inside the economic system because taxation will just leak it out of the system. That means that people will have less and less disposable income, less money to pay for luxuries like food. In this video, we're going to talk a little bit more about Rule 110, overcome the fear of risk. The fear of risk. Fear is really just rock solid in financial markets, but the fear of risk is all about the fear of getting in and also the fear of getting out. Now we've painted a basic picture on what things look like at the current time. The probability of a 50 basis point increase is absolutely on the cards. We have a potential for a weakening economic system and weakening amounts of money to come in through capital formation. Let's have a look at the market impacts, or actually what happened to price in the past 24 hours. And thank you to everybody who watches and comments. It's just awesome. And I love how new people are reaching out to say hi. A very warm welcome from me and the entire CTKS family. The prospects of increased taxation and also a weakening economic system really disheveled the financial markets in the past trading session. We saw all sectors coming down by 0.2%. Best performers, consumer staples like food, that luxury. And the worst performing sector was energy, 2.65%. It's amazing how quickly things can turn around. We saw a blanket of green in the past trading session. Now we're getting red all over the place, and especially energy. Look at that. Wow, that's pretty rough. And also financials are being hit. Inside the crypto market, just at the time of this recording, Bitcoin was up 0.53%, just a little shy of 60,000. Ethereum was coming down, Solana not so much, and BNB bucking the trend. We did see the meme coins just going for it in the past 24 hours. They're pretty interesting to keep your eyes on. When looking across the top cryptos, we can see just at the time of this recording, Bitcoin was up a little bit more, 0.7%. And we can see that BNB about 3% up and Doge nearly 3% up. The greatest gainers in the past 24 hours, BTT, Brett, well done Crypto Brett, Binary X, Arweave, Tron, Aave, Floki, Dog with Hat, and Matic. The greatest losers in the past 24 hours, SUI, and it's not much of a loss, anything under 4% is quite good. Mantra, FET, Litecoin, TON, DYDX, Ethereum, OP, and Rune. We have to always keep in mind that the retail pulse, as determined through the news, is all about just what happened in the past 24 hours. Market impacts are the actual impacts. That's what price actually did. But the institutional pulse is the key thing to look at. We need to understand where things can go in the future. And thank you to TF Theta, John Kemp, and so many other people that commented in yesterday's video. It's just awesome. To overcome the fear of risk, you must have knowledge. Knowledge directly overcomes fear. And of course, knowledge must be turned into experience by action. As we're in an election year, looking at the presidential cycles on weekly data since 1900 via Fidelity, who do fantastic research, we expect a bit of a pullback and a rally into the end of the year, but things could get a little bit volatile before they do the Santa Claus rally, if the data holds true. Please let me know in the comments, what do you think? Do you think we're going to get this rally in? And if we get a rally in, it's pretty much just wobbling around where it was. So it will be definitely a trader's market. And you can look into the following year, some negative price momentum. We can take advantage of this as traders, but if you're investing from here down to here, it's pretty damn tough. That's why it's really good to combine both trading and investing skills. If you're putting money in the markets, you should be able to do either and preferably both. Let's just get a little bit of a pulse on the main markets. We saw that the VIX was coming up, and that caused Bitcoin and the entirety of crypto to come down before it started to revert. What about the NASDAQ 100? The VIX is a very important gauge to understand. I would suggest you look at the VIX. It's vitally important for you. And the past 24 hours is just this part in here, which is just this part. You can see that the VIX really impacts so many different things. It's very important to keep your eye on the VIX. A lot of people say, oh no, don't worry about it, Ken. If I'm trading gold, I'll just look at gold. That's all I need to look at. Well, that's a good start, but if you look at more charts, you'll get a much better picture and you'll make a lot more. No alt can escape Bitcoin's gravity. So if Bitcoin is coming down, which is represented by that blue line, what is Ethereum doing? It's coming down. But if Bitcoin goes up, what's Ethereum doing? It's coming up. But if Bitcoin goes down, you get the picture. Does it operate and work on Solana? Yes, it does. What about Binance Coin? Yeah, it does as well. What about XRP? Yes, it follows directional bias. What about Doge? Yes, it does. What about ADA? Yeah, it's the same thing. What about total crypto market cap, which is literally everything? That is Bitcoin, Ethereum, and all the alts. Of course, it all follows. Now, what does this mean? You must know your structural levels and a lot of other information compared and contrasted from Bitcoin into your beloved alt. For example, if you're wanting to buy Ethereum or you want to buy Solana or Dogecoin or XRP, ADA, it doesn't really matter what you want to get. You must look at Bitcoin's gravity. Why is it important? Well, you can see because it directionally impacts the future of your particular profitability on what you're investing in. So it's vital. Understanding Bitcoin's gravity is really important. As Bitcoin comes up, we know the alts come up with it. As Bitcoin comes down, we know the alts come down. And one thing that we particularly see, Tron tends to shine in the darkness as far as Bitcoin and the other cryptos are concerned. Also, Arweave tends to do quite well. So this is just something that you want to bear in mind. How Bitcoin is performing will impact everything across your crypto portfolio. In yesterday's video, we looked through liquidation data and liquidation heat maps, and many people found it really useful, so I'd like to do a bit of a deeper dive. In yesterday's video, we saw nearly 100 million in 24-hour liquidations. The vast majority were long, but long and short liquidations are always on the cards. We can see that today we've had a little bit of an increase in 24-hour liquidations. They've risen up to 138. The longs and the shorts are now kind of equalizing with each other, but it's a really low volume, so I would call it there's a lack of institutional participation at the current time. Let's specifically look into the liquidation heat maps that we looked at in yesterday's video. What I've done specifically for you is I've drawn this line up at the $60,000 mark just to make it a little bit easier for you to see what I'm focused on in terms of liquidation heat maps across the different time periods. There were a couple of ways things could go in yesterday, and here we're looking at 12-hour liquidations. We could have come up and just liquidated before coming down and grabbing all of those longs, or we could have come down and grabbed all the longs and put more shorts into the market. Let's have a look at what actually happened. You can see that 60,000, and this is the 12-hour liquidation heat map. You can see that we came up and liquidated all of those shorts, but we left a whole range of shorts just hanging around, literally up to around the $64,000 mark. Now, what happened next? We liquidated all of those shorts, and then the market makers said, what the heck? We'll start to liquidate all of the longs. This can give you some kind of concept as to where things are going. Market makers typically just get gravitationally attracted to high liquidity zones because they need big amounts of funds to absorb their orders. But it's not a guaranteed thing. Please keep this in mind, but it does help. And what I've just done here is to provide 61,413 as a potential level up there. So if we get upward price momentum, we could potentially tap that, or if we go down, more and more shorts will pile into the market. The way that Bitcoin goes explosive is through cascading liquidations of shorts. And big sell-offs occur as we just crash through all the long liquidations. One thing that I would like to draw your attention to is price moving in a wave between all of these higher level shorts, just liquidating the shorts out, and you notice it kept them there, and then also just liquidating the longs. Just keep your eye on that 60,000 because we're going to go through quite a few of these. Unfortunately, so many people just say the market is going down, or the market is going nowhere, or the market is going up. It can do all three things in a span of 24 hours. Therefore, if you're just searching for just a simplistic answer, is the market going up or is the market going down? It means that you need to look more closely into how price actually reacts. On the 24-hour liquidation heat map on yesterday's video, we saw this $60,000 mark. What did we notice here? There were definitely some shorts that were inside the market, but we'd already just crushed through quite a lot of them. But there weren't a lot of longs underneath until we got down around that 55,000 mark. What happened overnight? What happened is that we ended up just crushing through all of those upward areas, just like we did on the 12-hour. And you can see so many shorts are entering the market. When the markets get overbalanced and there's too many on one side, either the short side or the long side, the market makers will correct the market imbalances. The CTKS method is all about transforming the before to the after, from fear into confidence, and to be able to profit going long at spot in any market condition. The one thing that you want to avoid is following the crowd. Remember that the news headlines are mainly noise, they're not signal. Let's have a look at the 3-day liquidation chart, and this is the data from yesterday. Again, that solid line in on 60,000. We saw a definite balance above that 60,000. That could potentially draw the market to liquidate. But don't forget, it could have also gone the other way. The market makers could have just pushed the price down so that they would attract more and more shorts into the market. This is why we need to look at chart interdependence, especially the VIX at the current time. What we can see on the 3-day liquidation heat map today, we've come in through that 60,000 and liquidated. Look at all the shorts just clumping up above current price. what it was back there. And also notice this wave-based function. It came up, grabbed some liquidity, came down, went up again, grabbed it again, come down, and look at the longs. We've got a lot of buying the dip here at the current time. Let's have a look at the 1 week heat map, and this was yesterday. Again, that solid $60,000 line is there. We saw quite a lot of shorts inside the market, and proportionally there were less longs. But what happened next? What happened next is we just rallied in and took out all of that liquidity before just reversing down again. What happened on the 1 month? We can see just around here. This is what it looked like yesterday. And this is what happened. We came up, tapped that liquidity, but we've left quite a bit of it. We want to get more people to buy the dip. This is on the 1 month liquidation basis. What about on the 3 month basis? You can see here, yesterday was like this, that solid line at 60, and we came up, tapped some liquidity, and just reversed. It's almost what you would call a liquidation grab. They grabbed that liquidity. You can see that when looking at liquidation heat maps, it's not a guaranteed outcome. It depends on what time frame you use. But one of the things that we do is that we focus on CTKS Structure, which is literally the world's most powerful smart money buy and sell level detection system. I'll just show you how it works. But first, a message from our dear friend. This is Borsog. Say hello, Borsog.
Hi, dear friends. I'm Borsog, the price eagle, and I read a chart in a very specific way. If price is here, above the price is a structural resistance line. That means price is going to go down. Ha, I'm back. Oh my goodness. Sorry, Sean, I can't do you for that long. All right, just explaining what Borsog was talking about. If the price is here, any lines above here are called CTKS levels or Stanfield levels. If they're clustered and stronger, which means thicker, that's structural resistance. It's hard for the price to come through. What you typically see, if price can't hold on to a structural level, it's going down to the next structural level. Borsog is always looking to the right. This is structural support and this is structural resistance. And this makes everything easy. Many thanks for Borsog coming partially onto the channel and explaining structural support and structural resistance. Why don't we look at the structural support levels on Bitcoin and just pull everything together? Unfortunately, typically what people do is they just look at price like this and they have no awareness of where the actual structural levels are. And structural levels are unlike anything else. They're not RIP levels. They're not recent indicative price levels. They are structural levels. They're like the framework from which price hangs. And when we looked at price in yesterday's video, we were just here and we were saying, could price go to B? Could it go to A? Or could it go to C? Now we made a play for A, but we know the VIX spiked. And when it spiked down, it literally brought it down to the C level. And then it's just been recovering. At the time of recording this video, Bitcoin was 59,389. But how does structure help you? Okay, time for X-ray vision. Time for Borsog. When looking structurally, you can see a lot of things. This is a fair value gap that got filled. This is another fair value gap that also got filled. We know where the fair value gaps are in price before other people recognize that they're there. This is a just incredible breakthrough in technical analysis, and the CTKS method gives you that ahead of time if you know about fair value gaps. What we saw here is that we had all of this overhead structural resistance. It was so tough for Bitcoin and therefore the entire crypto market to come through all of that overhead structural resistance. As the VIX kicked in and said, hey, I'm going to put in a BA, which is a buy arc, which people learn about inside the masterclass. We saw lots and lots of negative price momentum, but always constrained by structure. Look how it came down and tapped those structural levels and then reversed up to structure and then reversed away from it. If you know where the structural levels are, you're ahead of 95% of people. And you don't even have to look at liquidation heat maps, but it's useful to do so.
Today, the question is, are we going to hang around B, or are we going up to A, or do you think we're going to C or below? So A or above, around B or C or below. Please pop in your A, B or C. It's a really useful thing for you to do. It'll get you to actively learn, and when you actively learn, it is literally a game changer. How do we make this a little bit more practical? Remember looking at all of those liquidation levels. If you had an understanding that we were getting into so much overhead structural resistance, you would suggest from your analysis that if we came up, we could do so up to a certain point, around that 61,450 level. And if we got up to there, we would likely either consolidate and make our way higher, or we could break down. And if we broke down below 60,650, in all likelihood, we were heading down to around 58,650. And why wouldn't we stop right there? Because if you have a negative fair value gap or negative air, what it means is it will likely require multiple structural safety support levels to reverse price, not just one. What does it now mean for current price? If we can't hold on to the 58,500 level, we've got a negative fresh air gap down, and potentially we could just pop down to 57,400 or below. If we start to get above B, we've got positive fresh air. We could rally up substantially. Now that will catch a lot of people off guard if that happens, but at least we're prepared for it because we're always thinking in terms of a wave. We know waves go up and down all of the time, and we exist to take advantage of that. We've just looked at the structural level on Bitcoin, but we have so many other structural levels that we could go through. Let's just have a look at the structure on Ethereum. If we looked yesterday at Ethereum Structure, we would have seen something like this. When we just look at naked price, price, put some clothes on. If we just look at it like this, it's all over the place. But if we put on the indicator, the structural levels, we literally have X-ray vision. What we can see around that 2670 mark, there was a lot of structural overhead resistance. At the current time, we were making our way away from that level into structural support. And this is a particularly strong structural support level. So just keep that in mind. So as we came down, we found structure, and then we came up, we found structure, and then we came straight back down to structure. A lot of people would say when it was selling off, oh my goodness, this thing is going to zero. It's going to fall through the floor, especially something like this. And also people would say, oh, it's going to the moon. Look, it's so green. No, it's going to structure. This is always the way. Okay, Ken, well, that's interesting. So Bitcoin structure and Ethereum structure, that definitely makes sense. What about Microstrategy structure? Let's have a look at that. Looking at Microstrategy, you can see it's up and down and all over the place. Look at this. Can we see any structure inside here? Well, we need to put on the indicator. Let's do so. We can get a whole world of information by popping on the indicator, and this is available through CTKSMethod.org. We can see this area at 139. Look at that. It's just superb. It put the ceiling on price. We could be looking to the right, just as we're looking to the right now, and we know where structure is inside the chart. What about here, around that 130, the 128, 127? Look at all this structure underpinning here. Microstrategy has a lot of underpinning structure, and if it gets through this 139 level and confirms it, this is a failure because it's a break right through there. There are also minor levels of structure which you may not be able to see, but if you've got the indicator, you would be able to see these levels. So what does it mean? Microstrategy is structurally bound. That's pretty interesting, Ken, but what about something like gold? Can you show me the structural levels on gold? And could I get them if I want them? Yeah, you can just pop across to ctksmethod.org. Absolutely, let's have a look. Looking at gold, we can see that it's moving all over the place, and recently it broke out. You had no shortage of news and press articles about gold making all-time new highs, and well done gold, pat on the back. But what happened next? It went exactly the opposite way. Can this be defined from a structural perspective? Okay, let's pop on the indicator. As soon as we pop on the indicator, we can see that there's a lot of structure inside gold. The 2494 level is particularly strong, and it's important. You can see what happened here. We had a fair value gap, and that exploded gold upwards. The resistance, the potential, this long wick here was in response to this very heavy structure just above 2516. And then when we saw more and more structural overhead resistance up to this level of structure, we saw that it just couldn't hold it. It started to move below structural support levels because they weren't confirmed. And then when we had the big spike in the VIX, gold didn't reciprocate. It came down. The VIX will generally crush all risk on and also risk off assets, so please be aware of that. But where did it reverse from? It reversed from a structural level and got remagnetized back. That's why these levels are magnetic. Price tends to wobble around them and get attracted back to them as well. When we think about Rule 110, overcoming the fear of risk, you can only do it with knowledge. You can mark up your own CTKS levels if you learn Level 1 and Level 2 standard certification. The only way to overcome fear is through knowledge. And for years, we've proven out just how powerful those structural levels are. So what we've done is to look at Bitcoin, we've looked through gold, we had a look at Ethereum structural levels and Microstrategy structural levels. But you could look at all of them. And looking at the S&P 500 and the NASDAQ, as well as the Dow and the Russell, is particularly good. The DXY indicator was updated, as well as the Aussie dollar. They've been going in opposite directions recently. And if you would like the indicators, you can just pop across to CTKSMethod.org. These indicators are what I use to trade. Joe D has very kindly offered a partial masterclass scholarship. Your name could be here. All you have to do is to reach out and directly message me on X/Twitter. The details are in the description of this video. And when you pop across to ctksmethod.org, please subscribe to the email newsletter. That's coming soon. Inside the masterclass, I talk a lot about positive excellence and real wealth. They're very important concepts to understand. Your psychology will determine if you can get in or out of the market. Psychology is incredibly important. And just know that progress is twice the setback. So if you're getting set back by anything in life, your progress will be double going forward. So always have a positive outlook on life. And don't worry about setbacks. We all get them. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And because you've made it to here, perhaps put something in about X-ray vision so I'll know you made it. Have a great one, my friends. Bye for now.